Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Don, how are you today?
Very well, John. Looking forward to this.
Good, me too. Yeah, we've got in about 7 to 10 minutes, we're going to bring on Kelly Malcolm, who is CEO of Borealis Mining. The ticker in the US is BORMF. Looks like a great looking chart. Just unbelievable growth here in the last 6 months plus or so. So I think for our viewers that are looking for a story with some momentum, this is going to be an interesting one. Don, why don't we start with some macro? Obviously, investors in this sector that may have gotten in September, attending Beaver Creek or Denver Gold are a little bit beaten up right now, given that their entry point may have been towards the high end of a chart, right? And we were just saying on a previous interview, you and I, with Jesse Day at VRIC, that this is not to be worried about. Like you can never get the entry points correct. You just have to buy multiple times, at least in my view. I don't buy once, I don't buy twice, I buy multiple times because I'm never correct on the buy side. And so you want to revisit those stories to make sure you have conviction in what you did the first time. And if you do, then you add to the position. What do you think about
that? Well, I have two thoughts here. We talk about the silver and gold price. We talk about the underlying macro. So I kind of want to talk more about the underlying. Why gold's at 4,000 and why it's going higher, why it's not going to break down here. I think that's the story. I think gold going from 2,000 to 4,000 is the story. And we're early in a bull market here. I mean, if you look at the charts, if you look at where the miners have been over the last 10 years or so, they haven't broken out. They basically broke down severely versus like the S&P 500. And so the miners are just starting, and they're not going to really outperform the S&P until the S&P stops going up. The story here for me is the U.S. economy, the U.S. bond market, and the fact that I think the U.S. economy is headed into major problems here. Everybody's focused. The media gets to set the narrative. So the media sets the narrative that GDP is growing 3%, and the unemployment rate is low, 4.2, and the stock market's at an all-time high, and earnings are fine, inflation's under control, and they focus on that little window, and they control that narrative, and you miss what's really happening underneath the covers. And underneath the covers, the U.S. economy has basically been slowly deteriorated, and the main one takeaway there is the middle class. So the middle class has been hollowed out for decades. And now they've basically been living on debt. And because we were living on debt, we had to print a whole bunch of money to keep this economy going, which created inflation in 2020. And now it created extra pressure on the consumer, extra pressure on the bottom 50%. So these drivers they're getting to the point now where it's starting to become obvious. I mean, I've been negative the stock market for at least 2 years. And it's been able to hold on. Everybody, well, it's just going to go and go and go and go. But Warren Buffett keeps accumulating cash. He's up to 380 billion. He has 57% of his total fund in cash.
Yeah, but what does Warren Buffett know? I'm just kidding.
Well, I mean, he's not a little bit in cash. He's a lot in cash, and
Right.
he's been around a long time. He's not wrong. He's not wrong that they even call it the Buffett indicator. The Buffett indicator.
Right. You have an indicator named after you, and he's over half cash.
You kind of know, but this indicator goes back years, and that indicator is when the stock market is valued too much versus GDP, and it's currently 200% above GDP. And Buffett basically says that's a bubble, and that's going to come back. That's going to revert back to the norm, back to the mean. Then you got the sales, price to book, price to sales are also at historical values. And you have the margin at all-time highs, where margins is when people are speculating, chasing Momo. You have 40% of the S&P is the size of the S&P is by 10 companies. And so you have this huge concentration. And then we're seeing clues, right? The retail customer, we saw Chipotle's stock down 50% this year. Chipotle, I mean, that's a fast food, but it's one of the better fast foods. If Chipotle can't make money in the fast food, who is? So we're seeing signal, and and it really comes down to just one thing, which is the bond market. The bond market, the U.S. bond market. That's the only reason why gold's going higher, in my opinion. It's because the U.S. economy has been, the strongest economy in the world, 24% of global GDP, in tandem with the rest of the world using dollars for international trade and using U.S. treasuries for reserves. So you got those three major factors. Then you got 10 to 12 trillion dollars of foreign money in the U.S. stock market, which is hot money that's only here to make money. And if the U.S. stock market goes down, that money's going home. So you have all these big factors. Then you got the BRICS, who are slowly and steadily trying to pull away from the dollar, and use international trade using their currencies, with China leading the way on that, and which is their big elephant who can basically move the needle in that regard. So you have all these underlying factors that are driving gold higher, and it's that those factors are not getting worse. They're actually, for gold, they're actually improving. As the U.S. economy gets weaker, which we're seeing it get weaker. That actually helps gold more. And so what I'm waiting for is for gold, the miners, to start outperforming the S&P. And they're starting to. Like I saw somebody, they're using charge with silver and gold and the miners against the S&P. But it's early. It's just starting to turn up because the stock market has been so strong. When the stock market is strong, it's really hard for those other factors to get ahead of them, for those charts start to turn up. But once we get a decoupling, that's really when the gold and the miners get to win at the back. When the stock market goes down and stays down, and gold pivots higher, that's what we're waiting for. We're waiting for that outcome, and I think that outcome's inevitable and not very far. I've been waiting for the stock market to basically roll over. Now, I can't predict when it'll happen. I don't know the factors. It's probably some type of a black swan that makes it happen. But, as Jim Rogers liked to say, you don't end the business cycle. The business cycle still exists. That didn't go away. And we're 15 years into this one, and we're overdue. And everything's pointing to it. And like I said, the mainstream narrative, Wall Street, they want us to believe that everything's fine. Everything's fine. I mean, we've been having kumbaya parties on some of these business shows. And like they're just completely ignoring any of the external data points and just focusing in on their little data, their data points. They all look good. My data looks fantastic. How's yours look?
Well, I guess what you have to ask yourself as a listener here, or an investor in general, is, will anyone from those CNBC or other shows have your back when you're down 20% plus in your portfolio? Absolutely not. They don't care about you. They don't know you. They don't know your risk tolerance. They don't know what your goals and dreams are. And so this is what we call talking heads, right, Don? Like, this has existed for decades on TV. It's just a very prevalent thing right now because the market is never really looked back from the March of 09 lows. I mean, March of 09 to now is 15 and a half years. Like, is that right? 15 and a half or 16 and a half? I don't know. But it's just crazy. It's just a crazy rally. This has never happened. We're on air, like this has just never happened before. Just like gold at 4,400 backed off the other day because it never got there before. When you start achieving things that never happened before, you have to watch out for some downside risk. And so I don't think this sell-off in gold and silver is anything but a blip. Like you just pointed out, GDX which is the large cap miners. You know that we saw some earnings from Newmont, beat by 27 cents or 29 cents, was down 8% that day on a huge beat. Like, it's hilarious. Agnico Eagle, AEM, killed. They were like up 3% that day. They should have been up way more. You can go down a list, but that's 15% of GDX right there, those two stocks. So when you look at GDX versus the S&P, SPY, draw a 1 year chart, draw a 6 month chart. You are seeing a change in behavior. You're seeing GDX starting to outperform the S&P, and I think that trend will continue.
Oh, absolutely. I think it'll continue.
Yeah. Don, let's leave it there so we give Kelly a good chance here to talk about his story, Borealis Mining. Kelly Malcolm joins us today. Again, the ticker in the U.S. is BORMF, and in Canada, BOGO.
A very catchy logo. Going very well, thanks. I was listening in. One of the funny things, actually, to your earlier comment about how the AI stocks and everything are driving the market, I read a funny post that Korean fried chicken stocks, in relation to Chipotle, Korean fried chicken stocks are up hugely right now because the NVIDIA CEO was seen eating at one of these big restaurants. So it's even AI driving the middle market. It's so funny.
That's hilarious. Oh boy. Well, hey Kelly, we're happy to have you here. Would you be kind enough to give us a 7 to 10 minute overview of what's happening at Borealis, please?
I'll just give my forward-looking statement early here. This will be exceptionally forward-looking. One of the reasons for that, John and Don, is that we haven't yet provided guidance to the market. So when I speak about the upcoming Borealis production potential and maybe profile, just be mindful that we will provide guidance to the market on what the upcoming very near term, which is so exciting, very near term gold production will look like. So just keep that as a caveat for your listeners.
Sure.
What we're looking at here is the Borealis Mine. And actually tomorrow, we're speaking today on Monday, November 3rd. Tomorrow, we're coming out with a documentary with Earth Labs Expeditions that'll do a spectacular job showing your viewers the overall site, the growth, the exploration potential. So keep an eye out for that after you watch this video. And again, be very mindful of these forward-looking statements. The really exciting thing at Borealis, in contrast with many of the other mining companies out there, is that we are actually able to mine gold. This is a video I took from a few weeks ago of us pouring doré at our fully built, fully permitted, fully operationally ready Borealis mine site. No capital required to resume mining, which will start in Q1. We just announced that in October of just a few weeks ago. Target is kind of middle to end of January, if not into early February for first blast. And we will be a steady state miner on a company that has no debt, doesn't need to raise a single dollar to execute upon this business plan. And again, in a very forward-looking statement, are essentially in a self-funding position where we are very likely going to be able to self-fund our development asset and bring a second mine online with production from Borealis. So we are genuinely set apart from many of the other miners out there that have great projects, great resources, but you won't see gold coming out of the ground for several years for most of these different assets. Oh, let me see if I can skip ahead here. Sorry, guys, one moment. I'm traveling on my iPad. Oops. Sorry, little technical difficulties. There we go. So fully Nevada focused. We are our flagship asset, Borealis. I know that some of your listeners know Lahontan Gold. We're just down the road from Lahontan, right near the town of Hawthorne, about 25 minutes from the town of Hawthorne on a county road. Again, fully built mine, all power, water, everything is all there, ready for us. That's about $60 million US of infrastructure. Honestly, inflation driven, it's probably closer to 100 now that we've got on site. At Borealis, we've got a historical from 2011, which was part of a bankable pre-feas study, 1.8 million ounces in the M&I categories. Our development asset, which we bought in an all-stock transaction in March, which I'll show you why it's so exciting in a minute, has another roughly 500,000 ounce resource base. So you're looking at roughly 2.5 million across the two projects. Plus, we've got some optionality on a really intriguing play called Big Balds right beside Kinross's Bald Mountain Mine. Structure here is very robust. So this is probably different from what your viewers would see on Stockwatch or Yahoo, because our financials haven't been updated. Over the past few months, we've raised in excess of $10 million through warrant exercises, cleaned up the balance sheet. We've got a cash position better than, let's say, better than 11 million Canadian today, with revenues coming in from gold production, which is ongoing at the mine site from crushing of the stockpile. So we've got a very, very healthy balance sheet, no debt, market cap as of 2 minutes ago of roughly 170 million Canadian. Very, very good ownership. I own about 4%. Balance of the management team own the rest of 10. Both myself and the chairman were in the market buying a couple of weeks ago to the tune of $250,000 between the two of us. Big players in here. Rob McEwen, 14%. Eric brought 10%. Great retail shareholders, very strong institutions, and we are good at picking up deep value. So the Borealis project we bought for $5.1 million, or roughly $2.8 per ounce in the ground. Gold Bull, which is the Sandman project, picked it up in March for about $13.50 US per ounce in the ground. Stock's done admirably well, but in this ramp-up period that you were talking about on the chart, we chewed through, like I said, $30 million worth of warrants, that many of which were just kind of flipped and recycled. I'm sure our last financing was down at 56 cents, so it's a nice triple for many people, and I'm sure some of that disappeared, but really, really looking great coming into this pre-production position. Team here is next level. Just a quick introduction. Bob Buchan is our chair. He is the founder of Kinross Gold, built it from pre-IPO into the third largest gold company. I had lunch with him on Thursday last week, and he said the stock, when it hit $39 2 or 3 days ago, it hadn't hit that since his tenure in the late 1990s, which is pretty incredible. So he's built huge companies in the past. Greg Gibson previously ran Jarrett Canyon for Eric Sprott. He was the president of Sprott Mining. Rich Patricio, co-founder of the best mineral deposit potentially in the world, Next Gen Energy, on the board there. Christina McCarthy, previously of i-80 Gold, Paycore Minerals, McEwen Mining. And for those that don't know me from your listeners, prior to Borealis, I was the vice president of exploration at Amex Exploration, where we built an asset from basically zero, no ounces, up to better than 2 million ounces, and it will be one heck of a high-grade mine in the future. On the ground, Andreas and Ian are living basically 20 minutes from the mine site. Luciana, CFO with 15 years plus of Nevada experience. All in all, very, very, very strong team to help us execute on our growth plans. So the Borealis mine itself historically did 600,000 ounces at 1.7 grams, largely from oxide heap leaching, all from heap leaching, largely from oxides. All permits are in place for us to resume full-scale mining as announced a couple of weeks ago. We are currently producing gold and silver from a stockpile that we've got on the project of about 335,000 tons at about 0.6-ish grams per ton. Very, very, very cheap production from that small, not small, but from that stockpile, because all we have to do is crush it, leach it, and pour the doré. I talked about the resource base here from 2011. In terms of operational readiness, permitted, working heap leach pad with 4 million tons of capacity. We are still pouring gold. We are gearing up to restart, as mentioned, in January-ish. Great exploration potential. Take a look at that documentary tomorrow. It's going to talk a little bit more about that. We don't really have the time to go through it in much detail. I'd rather talk about the potential cash flows here. Surrounded by Hecla in green to the south, Headwater JVing with Newmont directly adjacent to us. 25 minutes, as mentioned, from Hawthorne, 2 hours from Reno. Great spot to be in the Walker Lane trend. This is a snapshot of the mine site itself. There's a number of different pits that occurred on a single linear northeast trending fault. This is where the bulk of that historical M&I resource comes from, and where the vast majority of past production comes from. Coincidentally, it's where we're going to be starting mining in Q1 of this year. In terms of operational readiness, I showed you a gold pour. The plant is working, the heap leach pad's working, our team is dialed in. We are ready to execute. We have done a couple pours in the past from residual heap leaching, which for those of your audience that don't know, we've got these big heap leach pads sitting outside, and we're essentially rinsing them with water. That's what we call residual leaching. The recent gold pour we did a couple of weeks ago was the first time that us as operators have crushed new ore, put it on the heap leach pad, treated it with cyanide, and bore the fruits of that labor. This is a snapshot of our heap leach pad. So we've got this large stack. Overall, this is a much larger footprint than you can see in this image, sorry. But we've got about 4 million tons of capacity, currently treating this with cyanide. We've got a crushing spread here that can do 3,500 up to 5,000 tons per day. And on the left are the doré bars we poured from this first crushing exercise. Exploration potential, honestly, it's vast. The image that we looked at is this trend over here, one single fault of a number of faults that occur on the project. I think many of them are, well, it's proven that many are auriferous, but I think that there's a good chance for multiple additional oxide deposits on the project. And that is validated further by this image here. So again, the historical production is this portion of the project here. What we're looking at in these dots are grab samples of oxide gold at surface, many of which haven't been drilled and have real potential for additional, potentially high-grade oxide on the surface. Some of the examples of drill holes, I won't go in much detail. We drilled about 9 months ago, maybe a bit longer than that, 30 meters of 4.4 grams of oxide directly below a pit that's on the western side of the project with a beautiful high-grade oxide hit, 6 meters of 15 grams per ton. This is a genuine expansion of the known mineralization. We're going to start drilling again. Again, we'll put out an exploration plan either towards the end of this year or very early into Q1, but we do intend to get pretty aggressive at the drill bit. We've also got a sulfide body at depth. It occurs about 110 meters below surface. In that 2011 resource, it showed about 800,000 ounces of that 1.8 million in this graben body. And there are some spectacular drill holes here. 67 meters of 6 grams, 67 of 16 grams, 56 of 6.5, 115 of 4.5. And it's genuinely open for growth and open for expansion. So that's, again, something further down the line, but it's beautiful optionality for us to add to the production profile in the future. I won't go too much in the geology here. And then this is our development asset. So this is Sandman. We bought this through the acquisition of a company called Gold Bull. We paid about $8.9 million Canadian, all stock. That closed at the beginning of March. Very small resource here, to be totally frank, 433,000 ounces at 0.73 grams. But the reason we bought it wasn't necessarily for the resource base. It was for the PEA that came out in 2023. So Sandman's about 200 miles north of Borealis, which sounds like a lot. I'll tell you why it's not in a moment. The reason we bought it was for this and for the exploration potential. But the PEA in 23 showed at $1,800 gold, 121 million post-tax NPV, 81% IRR. The reason I loved it was the very low capex of 31.5 million pre-production. That produces a 9-year mine life. Oh boy. 9-year mine life doing 35 to 40,000 ounces a year, low all-in sustaining costs. And that's a long life mine with huge exploration upside in Winnemucca, right beside Integra, right beside SSR Mining, in an area that has a ton of miners, lots of operational expertise. But the PEA also looked to utilize an external ADR facility, of which Borealis has the one we watched the gold pour come out of the ground from that plant. So we wouldn't be trucking ore. What we would do is build essentially a small heap leach pad and concentrate carbon. So we'd load carbon at Sandman, truck the carbon. We know, for example, our carbon in our columns right now gets up to about 120 ounces per ton. So the transport cost for that is almost nil, and it results in us not having to build electrical infrastructure and can really keep the costs down nice and lean. And it's ludicrously levered to gold, John. It's so this was the $1,800 study, 120 million NPV, 81% IRR. At $3,000 gold, this is from the 2023 PEA. It showed a $420 million post-tax NPV, 215% IRR, which is something like 2.5 months payback period on that low capex. So we're updating the PEA. It should come out definitely before year end, hopefully a lot sooner, with some modern inflation adjustments on the inputs, but also with the much higher gold price. So I'm really looking forward to getting that to market. And the reason I want to get that out is it ties into, I think I'll kind of conclude with that. There's big, huge exploration potential here. I'll conclude in 1 second. Sorry, John.
It's okay.
There's 4 little deposits: North Hill, Silica Ridge, Southeast Pediment, and Able Knoll. If you zoom in on this map, these represent all the drill holes drilled in the past. In between these existing deposits, you can see a number of holes were drilled by Newmont. They just didn't make it into resource. There is mineralization scattered throughout there. There's lots of growth in between the deposits, but there's real potential for additional discoveries on the property, with some beautiful holes drilled in 2022 by the previous operator, including some very high grade as well. So lots of upside. But with that, I'll talk about Big Balds because it's also quite exciting. So we've got the Bald Mountain Mine over here to the east, 5 million ounce resource owned by Kinross. Historically did 5 million ounces of production. We're directly adjacent to it, where 2 huge trends, the Bida trend and the Carlin trend, coincide. We've got some big geophysical targets, so it's a big optionality play. But to the overall thesis that has gotten people very excited since we've really started marketing in September is, and again, use this, take this as hypothetical. We will provide some guidance, but let's say we could do 20,000 ounces out of Borealis next year at around $2,000 all in sustaining cost, with no capex, no debt, nothing to pay back, nothing to dilute. That would result in $35 to $40 million US free cash flow. Let's assume that we can get our permits for Sandman at some point in 2027 to build a 35 to 40,000 ounce additional production profile per year. That would yield another 80, 90, $100 million per annum free cash flow. And I'm using roughly $4,000 an ounce sale price here. So the setup that we have with the current structure that we have without any debt puts us in a position where Borealis could be a self-financed entity that could be in a position to generate $150 million US per annum free cash flow by 2028. Again, hypotheticals, forward-looking statement, but it certainly is a really, it's resonating very, very loudly because, again, we can take advantage of this gold market. We can build, and our team is also very focused on M&A opportunities. I still think even though the prices have gone up, they're still cheap, and there's still a huge amount of value to garner, particularly in the market that we're looking at, which is projects that aren't big enough for the big majors. So you're not having to pay $300, $400, $500 an ounce. You can still get good deals on some of these projects like Sandman that has ludicrous leverage to the price of gold. And I think with that, I'll turn it to questions.
Okay, great. Thanks, Kelly. The question I had, I'm just going to give you one because I wanted to turn it over to Don. Let's see. So going back to the slide that you had, I think 17 or 18, which showed Sandman. Yeah. So, Don, did you notice how close that is? The sleeper, that's Paramount's.
Wow. Nice.
Yeah, I know you like that deposit.
There's actually, they're all funny names. You got Sleeper, you got Sandman, you got Slumbering Hills. It's all the sleepy part of Nevada. But yeah, we're directly on the sleeper trend. And the previous geologists that owned this project are brilliant geos from Australia and New Zealand. The original thesis when they bought Sandman was not to develop a small-scale mine. It was to find another sleeper gold deposit, because sleeper, if you can get into the guts of those high sulfidation or low sulfidation epithermal systems, they can deliver some spectacular grades and some really steady state production. So we've got some potential for that. And speaking of a sleeper type target, jumping all over the place here. Sorry, Don and John. But speaking of a potential sleeper type number, 13 meters at 20 grams is genuinely in the sleeper ilk.
Gotcha. Okay. So understanding that you had some forward-looking statements there in the last few sentences, with a PEA that you may do for Sandman in the coming months, you would be using probably 2,800 or 3,000 gold, wouldn't you?
You know, it's a really funny question. Even speaking to the QP, if you look at recent studies, even 6 months ago, they were using $2,400 gold, but even the QP and I were think that's a foolish number to use nowadays, because I really truly don't see us pulling back to that number anytime soon. So yeah, 2,800 to 3,000. We're kind of figuring out the exact numbers, but it'll look pretty. It should look quite exceptional.
And you said a 2.5 month payback using a higher gold price, though, right?
Using a higher gold price, but also 2023 cost inputs. So the prices are going to go up a wee bit in terms of cost of everything, except for diesel has coincidentally dropped. But
Right.
everything else has gone up in price in the world.
Yeah.
You'll
So the
probably
CapEx will go up, but
CapEx go
the
up a
price
little
of
bit.
gold has gone up a lot.
Yeah, so I don't think you'll see these exact numbers coming through, but
Right.
you'll see slightly less. But even if they're half, it's a ludicrous number for a project that can deliver $100 million a year in free cash flow soon.
Yeah. Understood. Okay. Thanks, Kelly. Go ahead, Don.
For Sandman, how many acres is it, or hectares?
It's a huge project. It's 25 square kilometers, or call it 18 square miles. It's massive.
Okay.
And it was owned by Newmont. One of the interesting things about the project, before Gold Bull, who we bought it from, owned it, Newmont was doing a $30 million JV to earn into the property 100%. They had to do, they did about $15 million of work and said they wanted to own it. They didn't really have much else to do. So they did a plan of operations, which you guys are probably familiar with, covering the entirety of the property. So every single square bit of that project, we can go drill on tomorrow. They've drilled water wells. They've done all the archaeology studies, biology studies. So it'll simplify the mining plan of operations quite dramatically.
Big Balds, how many hectares is that?
Smaller. There's 2 land packages. It's not a huge package, Don, but it's got big potential. We've essentially staked up the entirety of the big gravity anomalies that are driving our exploration hypothesis.
Is it at least 500 hectares?
Oh yeah.
500, 1,000? Do you know?
Offhand, I don't know the actual acreage of it. No.
500 plus. Okay.
It's on our website. I can pull it up really quickly if you'd like.
Okay, so I'm going to go backwards. As Sandman, I like it. I mean, it's a pretty exciting project. It looks like, low capex, a lot of free cash flow, easy. So is that all oxides?
No. So what we're going to
Sandman?
do, it's in the resource base here. So it's 270,000 of the 433. I'm only talking about the indicated. There's also some inferred ounces, but I take those with a grain of salt. But of the indicated ounces, you're looking at 270,000 ounces roughly, all in oxide. Very, 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 very limited strip ratio. They're essentially mounds that stick out of the ground. And what we're going to do to expedite this, oh, sorry, no, Don, I was way off. 117 square kilometer land package. It's massive.
Okay.
It's a district play. That was completely off base here, but it's a humongous package. 265,000 of oxide. The metallurgy that was done in the past, largely by Newmont, indicates that the sulfide is amenable to cyanidation. That's something we have to work on, but what we're going to do is a 2-phased approach here, where we're permitting only above the water table, all of which is oxide. So the first 5-6 years of exploitation are completely in oxide and completely above the water table.
All right. So, Sandman, I mean, the exploration, you showed those drill holes, they look really good. It looks like you're going to start out production 35, 40, depending if you drill between now and then, but it looks like it's going to grow. It looks like Sandman looks like a ton of potential. It's pretty exciting, which, so I want to start kind of work backwards. So I think you did a really good job of explaining Sandman. I think anybody that's watching this is pretty clear on basically the potential. We're hoping for 2028 production, right?
Yeah, we're hoping for 2027 construction and then a full year of production in 2028. And again, that's very conceptual, but we will put out some guidance on all that stuff in the near term, Don.
Okay, so now on the Borealis part of the mine, that one is not so clear. So you said you were going to do full scale production in 26, but I don't think you're going to ramp up. You got a 1.8 million ounce, which is pretty big.
Mm-hmm.
So I don't think you're going to ramp up completely in 26. So what do you mean by full scale?
I mean consistent revenues for a multi-year period. Essentially a non-stop start operation that is a continual cash flow generator for us. So and this I don't think I mentioned in that discussion, of the 1.8 million, roughly 450,000 ounces would be in the oxide category, so readily heap leachable. So not the 1.8 million in and of itself is not necessarily all able to be stuck onto a leach pad. We may have to do some flotation, ship it off to one of the roasters, or use one of the different processes that are out there now that are getting cheaper and cheaper. In terms of full scale, I guess it's a made up word, and I understand what you're saying, but it'll be steady state revenues going forward is what I was getting at.
So, are you going to ramp up, like, for instance, next year, are you going to mine like 2,500 tons per day? Or do you guys have an idea of how many tons per day you're going to mine next year?
We do. We owing to selective disclosure, I can't fully come up with the numbers right now, but we are working on a release with the venture. The problem is we bought this property with what we thought was a current resource on 2011 study, pre-feasibility, good engineering group did it. When we went to list the company, the exchange determined it was a historic resource, requires some additional drilling and twinning. I'd rather spend some of the money on getting the gold out of the ground as soon as possible. So because of that, we get scrutinized a bit in our forward-looking guidance. So I'm going to come out with a comprehensive study of how many tons we're going to be pulling ex-pit per quarter. That should come out before year end, and certainly before we start mining. But on a hypothetical level, 20-ish at the outset isn't far off of the realm of reality.
Okay. So at current margins, I would think you're going to at least do $20 to $30 million a year at current gold prices, free cash flow.
Should be higher than that, to be honest with you. But yes, I'm in the same mindset, and that's excluding Sandman, excluding any growth.
Okay, and it seems like that Borealis has a lot of growth potential, because 1.8 million ounces and you're only going to mine 20,000 ounces in 26. So 27, 28, 29, like the next 3 years, is if you have two projects, but just on Borealis, it seems like you're going to be trying to figure out a way to expand production.
Without question, absolutely. So a little bit of the rationale behind how we kind of kickstarted things. So we bought this, like I said, cheap as chips, $5 million for all this infrastructure, resource, permits, all that fun stuff. When gold was $1,600 is when we signed the LOI. And I bought it for an exploration asset. I'm an exploration geologist by profession. And that's what really turned me on, was the exploration upside and the growth. We put the story together, we put the board together, we put the investors together, and as we were doing this, gold started moving up, and it became clear that production needs to be the core focus, but there is absolutely growth potential, and we absolutely do want to ramp up. So what happened was, about a year ago, gold started running. We're paying care and maintenance on the mine site because it's, again, fully permitted, fully built. So we're about $2 million a year going out the window. And I said, guys, we need a mine plan. We need to start executing. We need to start making some money here. Let's build something that gets us going for no dilution. I wanted something that wouldn't take wouldn't have to issue a bunch of shares or take on debt. Basically something we could do with existing cash reserves and kind of get the ball rolling down the hill at least. So we applied for what's called a minor modification to our mine permit with that starter plan in mind, with a growth mindset on top of that. So absolutely, we do want to expand, grow, and make this into a much larger production profile. But the nice thing is, like I said, out of the TSX venture, we're probably one of, you know this number better than me, but probably one of 30 that's going to be able to actually generate more than 10, 15, 20 million in cash flow next year, right?
Right, but I'm a long-term speculator, so I don't really care about
that. Okay. Well, it means that I don't have to do it anymore.
I'm actually a shareholder. I actually bought this early on when you guys were really cheap because I could see the potential. But now I'm looking at it, and I in 28, it looks like you're going to try to mine at least double what you're currently. The Borealis in 26, you're at 20,000 ounces. By 28, you're going to try to at least double production. Is that right?
That's certainly a target. Absolutely, yes.
And then,
if not beyond that, but we'll see.
And then, but that's kind of your minimum, right? That's your minimum, like 20K is like your minimum for 26, and 40K is your minimum for 28. You're going to try to exceed those numbers. I mean, that's kind of the plan here. Yep. So I'm valuing your company as 80,000 ounces a year down the road, like 28, but you're going to try to exceed that, right? You're going to try to get to 90 to 100. Is that
we're absolutely growth focused. Like our chairman is the founder of Kinross. 20,000 ounces a year, I can assure you, doesn't get him too excited. Looking for big numbers, big growth, big upside, absolutely. But
if that's what you want, just do a merger of equals with Paramount Gold Nevada and do Sleeper, and that'll give you some growth.
Yeah, it would.
just call her up, and say, hey, let's do a merger of equals.
No, they've done so good lately too. They're doing a great job.
Yeah, but they're a little apprehensive on building Sleeper by themselves, so they might be interested. But I see your company as a very solid, 80,000 plus ounce producer here in a few years. I mean, you got the assets, you got the team,
yep.
You got the location, you got the bank, you got the balance sheet to do it. Everything is in place for you guys to get to 80 to 100. But for me, the key to, as an investor, the key to success is growth.
Yeah.
So I'm hoping that you guys aren't content. I mean, you've already done a second acquisition of Sandman, so that's a good sign. I like it when companies are aggressive, so that's a good omen, a good sign.
So we listed this company in terms of not sitting on our laurels. We listed this company in August of 2024. Since then, we did an acquisition of another full TSX venture company. Did a $10 million financing. Started stockpile crushing. Have announced that we're going to start mining. So all within a year and 6 months of going public. I can assure you, we are not happy sitting on our laurels. We are very growth oriented, and that's going to be through both exploration, but we are definitely looking for other opportunities in the market. And just like you guys are looking for cheap deals out there, we're doing the same thing, and we're looking for synergistic opportunities.
Yeah, that's exactly, as a speculator and investor, that's exactly what I hope. It's what I always hope happens, is that you make your money on growth. You don't make your money on the first mine. The first mine just gets you in the door, and then the company can build second, third, fourth mine. That's how you do really well in this business.
Or you get into something like a Macassa back in the early 1900s, and it delivers 30 million every year.
Yeah, I always tell people you make money when you buy, not when you sell. So I got into Borealis at 59 cents Canadian, so I'm up 130%.
Beautiful.
So you got to get in early, and then you sit back and wait and see what happens. And sometimes it works, sometimes it doesn't.
Yeah,
But
and I would argue that you bought in at a higher risk profile than what's currently there. Like I said,
yeah,
now we're financed. We're on our way to start producing. If you value the Lassonde curve, we're right at the right at the fun spot on the Borealis.
yeah, well, yeah. So I do development plays based on a checklist. So the first one is the quality of the property. So you guys had 1.8 million ounces, which is a lot of gold in Nevada, and basically risk reward capex. You already have a mill, so that was low. So the property worked. Then the next thing is you look at the location. Location is fantastic. I mean, you got tons of infrastructure there, so there's absolutely no problem with that. Then if you look at the upside, when I was looking at it, and you're still very cheap. I want at least a 10 bagger. And so you basically check that bucket off. Then you look at the insiders. You guys have 34% insiders, probably more, but 34% that so the insiders are absolutely checking the boxes. So there's no problem there. The next one is the plan to production. I mean, it wasn't that difficult for you guys to basically assess what you have and figure out a way to put this thing back into production. So definitely had a strong path to production. So you guys checked all the boxes, and so that's what I look for. If I find a development play that checks all the boxes, it's a 10 bagger. I just buy it and then wait and see if it succeeds. But yeah, I mean, far as red flags for you guys go, it's just how long it will take you to get to 80,000 ounces of production, 28 or 29. Fingers crossed it gets to 28 and you guys don't run into trouble here, but there isn't really a high cost problem here.
No.
So you guys, the key here is just getting into production.
Yeah, get into production, then start growth. And
Yeah.
like I said, we're fully financed all the way through to Sandman. If we get into production, the stock starts moving. Once we start producing some numbers, will I raise some money and allocate all of that to exploration and drilling? Absolutely. But right now, for the next 3 months, heads down. Well, my head's marketing all over the world right now, but our teams are heads down on execution to get this thing turned on, and then we can start really looking to crank it up.
Kelly, you're a geologist. Do you have a mentor that helps you? Is somebody with operational experience that you kind of lean on?
A ton of them. So just on our board alone, like I said, Bob is the founder of Kinross, built Allied Nevada, which is now Highcroft. Unfortunately, there was some financial difficulties in his tenure, but built that from $0 to $4 billion. Then it had a spectacular bankruptcy, unfortunately, because Highcroft is challenging under certain metal price environments. Now it's again the biggest silver reserve in the world, but wonderful mentor. He's the Queen's School of Universities named the Robert M. Buchan Department of Mining Engineering.
Nice.
But Greg on the board as well. Literally, his first job was a jackleg operator underground in Timmins. He's a proper mining guy. Ran a number of different mining operations. Our team is really robust. Like our COO Andreas, he's young but he's brilliant, and he's built from pre-groundbreaking the Detour Lake mine. He's worked there for 5 or 6 years until that got ironed up. Worked on the Cote Lake gold mine for IM Gold from again pre-groundbreaking into a steady state. So we've got a great team across the board. I'm really happy with it.
Excellent. Well, thanks for being on the show. We really like the story.
Thanks for having me on. Really appreciate it. And good to see you in. Yeah. Where do we see you last, John? In Sweden.
Yes. Was excellent. And I'll be in Zurich next week, so maybe we'll see each other there.
I'll see you then. Yeah.
Okay. Well, thanks, Kelly. We really appreciate you coming on. It's a really good story, and as you can see there from Kelly's screen, Canada ticker BOGO, in the States BORMF. And Kelly, if you don't mind, we'll bid you adieu right now, and then we will summarize for our investors.
Fantastic. Thanks, guys. Have a great day.
Thanks,
likewise.
Kelly.
Kind of summarized already, so we don't really have to go through a full summary because we have like only a few minutes here, but obviously you're excited about the story. I actually knew the CEO of Gold Bull, Cherie, that ended up selling to Borealis, and I remember when that PEA came out in 2023, and it was on the smaller side. However, at these prices, you can see the leverage that a project like that has, and that's not even their lead project.
Yeah, so Borealis is somewhat of a difficult mine in that you could tell, the way they explained it, whereas Sandman is really, very smooth, permit, get it in production, 35,000 ounces for 9 years. It's real, Sandman's really clean cut, really clear cut, clean cut. Start at 35 and probably grow to 50, 70, 80,000. Sandman is actually kind of a more exciting project than Borealis. Borealis is, you could tell they don't have a plan yet. The one thing I always look for is a real strong plan. So they're going to have to figure out how they're going to grow that thing because the majority of that, only 400,000 ounces of oxide, so they can heap leach that. And that's 20,000 ounces, maybe more a year. That's very straightforward, but they got to figure out how they're going to mine those sulfides. I think they will figure it out, and then the costs are definitely going to be high for that. They're probably going to have to do, a PEA for the sulfides. How long is it going to take them to do that? And so that's the unknown part of it is those oxides on Borealis. But I like the fact that they have two projects, both of them can grow. They'll definitely they're going to get to 80,000 ounces a year. So, it's the key here for me is going to be that next mine, the third mine. That's the key to this whole thing. And hopefully that will happen, that these guys will, they'll build a third mine. And I think the third mine is where we're going to make our significant alpha. So it's kind of a spec, but for me, it's kind of a spec bet that it turns into a growth story.
Okay. Gotcha. Well, obviously, Nevada being the number one jurisdiction in the world doesn't hurt. Our two largest holdings are in Nevada. Guardian Metal, GMTLF, and U.S. Gold has their secondary project there, USAU. And the cost of drilling is sometimes high, but you have a very supportive infrastructure there. And I think under Trump, that is meaningful, right? We're seeing like over and over and over again, people that are smart CEOs saying, "Oh yeah, this is a great place to mine," and it turns out that that's not the case globally, right? There's hiccups all over the place in the last 2 to 3 years, and I think you've got some upcoming elections that may, cause more turmoil. So that is always an issue when you're looking about, investing overseas. There's a whole other dynamic there. So I like the jurisdiction. I like that they picked up both projects, it seems, for very little. So that's encouraging. And then, you look at the board, pretty experienced guys backing Kelly there.
Yeah, definitely like the board. That makes it, and like the location. Yeah, those are two big, they help a lot.
Yep, sure. Well, Don, as always, thank you. We appreciate it. And thanks to all our listeners for checking us out today. You were listening to Kelly Malcolm at Borealis Mining, and we'll sign off here. Have a great day.